NVIDIA has officially overtaken Apple again to become the world's most valuable company. We have a lot of news to go over here in this video. Big tech is dominating yet again, and we'll explain why. But not so fast, because I'm a little concerned about next week, and I'll share my concerns with you in this video. First up, we have a little bit of good news and bad news today. Durable goods orders month over month were expected at -1%. We came in at -0.8%. On face value, that looks good. But last month, we were at 0% and were revised down to -0.8%. So this is actually a bad headline number because we still came in at -0.8%, even though last month was -0.8%. So much worse than expected on the headline. Where markets got a little bit excited, where we took some of this as good news, is the durable goods orders excluding transportation. Month over month, we were expecting -0.1% and actually came in at +0.4%, whereas even last month was revised up from 0.5% up to 0.6%. So excluding transportation, the number actually looked good. We also had Michigan consumer sentiment final numbers for October that came in at 70.5. The estimate was 69, so that was a beat. 5-year inflation expectations stayed steady at 3%. That was actually a down move from 3.1% in the previous reading. Consumer expectations come in at 74.1 versus the estimate of 72.9, and current conditions came in at 64.9 versus the estimates of 62.7. So across the board, beat expectations. 1 year ahead inflation expectations were forecasted at 2.9%. We actually came in at 2.7%. So across the board, it was pretty good data today. And that's one of the reasons why big tech is moving higher today. Apple's up 1%, Meta's up 2%, Amazon up 2%, Nvidia up 2.2%, Google up 1.6%, and Microsoft up 1.3%, because that headline number on durable goods did not look great, but all the other data looked good. It kind of reinforces the big tech trade. You also have 10-year treasury yields that are moving up about 2 basis points today to 4.22%. And typically when we see that, you get big tech that outperforms relative to the Dow or relative to the Russell 2000. And that's exactly what's happening today. The NASDAQ is up 1.31%. The Russell 2000 is only up 0.17%. And the Dow is down 0.16%. So NASDAQ way outperforming the Russell and the Dow. That would be expected on a day like today. S&P is up 0.5%, really because of those market weightings in big tech. Now, some people also believe you are just seeing a gamma squeeze across the board for big tech right now. And that also makes a lot of sense when you look at option activity. Option activity in NVIDIA today is coming in very positive. You have seen 225 different trades totaling $104 million with a positive order value of 85%. When you have 85% of the options market just pressing the bid over and over again in options, it pushes stocks higher. Now, actually, under the surface in the S&P, you are seeing 146 different trades totaling $121.64 million with a positive order value of 20%. So in the S&P today, you are seeing very large puts coming in, and that could be a negative sign for what to expect next week, because I think that's where a lot of the positioning is coming in for next week. You can see here on the expiration date column, there's a lot of these options that are very short term in nature, targeting, October 31st here, November 1st here, November 4th. Lots of short dated options. Also getting some January and March 2025 contracts starting to come in, which is also a very short-term expiration at this point, as we are towards the end of 2024. Now, we did actually get some bad news for Apple today. That's why Apple is the least performing big tech name. This article from Barron says Apple stock downgraded. There's a big fear about the iPhone 16. KeyBank analysts see a chance for a further fall if consumers opt for price cut models instead of the priciest new smartphone. KeyBank's Brandon Nispel is concerned that some customers buying a new device could opt for the lower priced iPhone SE model instead. A survey found 59% of respondents indicated they were interested in upgrading to the iPhone 16. However, of those who said they were likely or extremely likely to upgrade to the iPhone 16, 61% were also interested in the iPhone SE. Nispel lowered his rating on Apple to underweight, which is essentially sell, from standard weight, which is pretty much a hold, with a price target of $200. Apple shares were up, actually, after this downgrade. But again, the reason I think Apple is up and big tech has a lot to do with the data that we got today and the gamma squeeze that is happening broadly with big tech. Keep in mind, this is what tends to happen before you actually do get a reversal, is you tend to see stocks move higher. Bank of America came out with a weird mixed note on Apple today as well. They say Apple to modestly beat fiscal fourth quarter views. They say that EPS will come in at 96 cents for the September quarter. And the brokerage predicts the iPhone maker to issue a better than expected outlook for its first quarter of fiscal 2025 amid increased demand for the Apple's flagship product once it releases its Apple Intelligence later this month. They say initial feedback on the integration of the iPhone's operating system with Microsoft's backed OpenAI's generative AI chatbot ChatGPT is positive. That's part of my concern for next week is the launch of Apple Intelligence. I don't think we're going to get anything that is super additive to Apple. I don't think Apple Intelligence is going to all of a sudden boost this massive upgrading cycle. That just doesn't seem likely to me, especially not with the consumer in such a weak place. And we already got news yesterday that Apple has essentially ordered 10 million less iPhones. So are we set up for disappointment next week is the question. And I think given where Apple stock is, the rest of big tech, you're more than likely going to get a disappointment across the board with big tech earnings. Now, they're still going to be good, but these stocks are priced for greatness. And if you don't get that, you have a problem. I also believe next week, you're going to get a lot more of the election starting to get priced into markets, whereas the election has really not been something that equities have reacted to. The bond market has reacted a lot to the potential of a red sweep or something along those lines that could boost the deficit, make bonds less attractive. Yields have definitely went higher in anticipation of the election, and that has had a little bit of impact on our markets, especially in the value areas, the Dow, the Russell, but it is not, largely speaking, actually had an impact on the markets yet. And if we're going to get that pre-election volatility, it's going to happen next week. Or at least that process is going to start next week. As far as next week's earnings lineup, you have Monday onsemi, Philips, Acadia, and others Monday morning. Monday and after hours, you have Ford, Transmedic, Cadence, Waste Management, F5, and others. Tuesday, you have SoFi, PayPal, BP, McDonald's, Pfizer, Royal Caribbean, JetBlue, Crocs in pre-market. Tuesday and after hours, AMD, Alphabet, Snapchat, Chipotle, Visa, First Solar, Reddit, Chubbs. Wednesday pre-market, you have Eli Lilly, Caterpillar, Humana, Global Payments, Trinity, Biogen, ADP, and Jinko Solar. Wednesday, after hours, you have Microsoft, Meta, Coinbase, Robinhood, Sonova, Etsy, Riot, Roku, Carvana, and Starbucks, which they already pre-reported. Thursday, pre-market, you have Uber, Peloton, Merck, ConocoPhillips, SiriusXM, Altria, MasterCard, Estee Lauder, Kellanova, and Norwegian Cruise Line. Thursday, in after hours, you have Amazon, Apple, Intel, Atlassian, and some others, United Steel's on there. Friday, you have Fubo, Chevron, ExxonMobil, Wayfair, Charter, Air Canada, and Butterfly. So next week alone, you have 6 companies over $1 trillion in market cap that will be reporting earnings, which just five companies that are over $1 trillion reporting earnings. Next week is the week for earnings season. And even though broadly speaking, the bar has been lowered this earnings season with earnings estimates that have been coming down, big tech names are priced for great earnings, not good earnings, not okay earnings. They are priced for great earnings given where their stocks are at. And I'm not convinced we're going to get great earnings out of these companies, and that is a little bit of a concern. Looks like to me on a risk to reward basis, it just doesn't look good for markets heading into next week. We also got news today that from the German finance minister that warns of retaliation if the US kicks off a trade war. JP Morgan CEO Jamie Dimon says, quote, cash is a very valuable asset sometimes in a turbulent world. And you see my friend Warren Buffett stockpiling cash right now. People should be a little more thoughtful about how we're trying to navigate in this world. It was reported that yesterday's reverse repurchase agreement market, the reverse repo market, seen an unexpected decline. It actually plunged $68 billion overnight to $202 billion, the lowest since May of 2021. This is pretty much excess cash that banks are parking with the Fed overnight. They're buying some of the Fed's balance sheet reduction as well. So as this money does wind down, it's going to coincide with when the Fed needs to stop reducing their balance sheet runoff. So this is something to watch. The White House just said it is possible there are more than 3,000 North Korean troops in Russia. And this does coincide with a slightly more aggressive sell-off we are now seeing in markets. The New York Stock Exchange today announces a plan to extend trading on its Arca Equities Exchange to 22 hours per day. If approved, the exchange will open the market from 1:30 a.m. to 11:30 p.m. on all weekdays, excluding federal holidays. The Atlanta Fed GDP Now tracker is also falling from 3.4% yesterday down to 3.3%, given the decline in durable goods orders. Your most recent AI investor sentiment survey showed a sharp drop in bullish investors, a sharp increase in neutral investors, and bearish investors that also increased. Bulls dropped from 45.5% to 37.7%. Neutral investors increased from 29.2% to 32.4%, and bearish investors increased from 25.4% to 29.9%. CNN Fear and Greed is coming in today at 62. Yesterday you were at 63, so a slight down move in the Fear and Greed index, which is interesting given the Nasdaq was up so much today. But again, a lot of that is just directly attributed to big tech. In fact, the RSP, which is the equal weight S&P 500, is down 0.05% today, which is kind of crazy. Considering, again, the Nasdaq is up 1.22% and the S&P is up 0.5% at the time of recording this video. The VIX is also falling today, 0.84%. It's down to 18.92, but that is still overall very elevated. And I think it does have to do with the risk of next week, really the next 2-3 weeks in markets. The percent of stocks trading above their 50-day moving average today is up 0.23% to 54.35%, despite some of the weakness you're actually seeing under the surface. Stocks, well, they're still breaking above their 50-day moving average a little bit today. Which again, right now, the markets are not seeing that as favorable. And again, heading into next week, I do think election concerns will start to become a top of mind in markets, especially if we don't have anything else going on. No geopolitical issues by then. It's going to be about the election come Monday morning. Now, if you look at the S&P is still up 0.2% at the time of recording this video. But look at this upper wick, okay? When you tend to get that, you see downside afterwards. What this means is the market started off at a lower level. They rallied, buyers took over in other words, and then sellers took over at the high, pushed the markets lower, and you ended up closing near the low of the day. That is typically a candle of reversal. When you get a high wick, you tend to see downside following that. Much the same way as if you see a wick with a very, long lower side, like here, right? Where markets started off, at open, sold off, and then buyers came in and bought markets up into the close. That tends to be an upside reversal. Right now, it looks like you're seeing a downside reversal candle. And from a technical perspective, that is not a favorable position to end out this week. Thus, I think you mix earnings that are not going to impress anyone, AI is not going to impress anyone, and the election concerns, and that's a recipe for a larger correction for markets. So let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. Have a safe weekend, and I will see you in the next one.